Hello. Today I chat with Vedika Jain, who is a partner at Weekend Fund, which is a great fund that invests in a bunch of great companies and also runs this awesome newsletter called Signature Block. And Signature Block is like a newsletter that kind of demystifies venture capital. And so Vedika and I chat about kind of that and what it means to, how they're demystifying venture capital, the rise of all these emerging managers, because, distribution is easy with Substacks and podcasts or whatever. And also the infrastructure is easy with AngelList and rolling funds, whatever. And so we kind of chat about what it means that solo capitalism is becoming more and more of a thing, and like the rise of emerging managers, and also how they're kind of becoming squads and collectives as well. It's a really kind of interesting convo about that, and also about kind of how, the first part of the conversation is how, we chat about how Vedika thinks about increasing surface area of serendipity and finding these like high output kind of job careers. It's like, how do you make the rest of your career look like a footnote, and only go for those kind of power law roles, I think is a really smart way of doing things, and kind of following your rabbit holes, following what you're excited by, and then going for awesome career paths. So I hope you enjoy today's episode. I learned a lot about, just like how to kind of move through life in a kind of outsized impact power law way, and also where the venture capital industry is likely to go in the next kind of 20 years. So I hope you enjoy it, and bye. Hello, Rhys's Pieces. I'm Rhys, the co-founder of Root, and welcome to The Rhys Show. I believe the best way to predict the future is to build it. And so I'm interviewing pioneers on the frontier to understand what the world will look like and the secrets behind how they're building it. These are insights from the frontier. And today, I'm excited to chat with Vedika Jain. Vedika is a partner at Weekend Fund, an early stage VC who has invested in companies like Intercom and Deal. Vedika, thanks for being on the show and welcome.
Thanks for having me, Rhys. I'm excited.
Me too. I'm excited as well. And I think what I want to do today is kind of pick Vedika's brain both on kind of the work that she's doing with venture and Weekend Fund and the stuff that she's investing in. She built this awesome kind of digital health marketplace map recently, for example. But then also what you're doing at Weekend Fund is really cool around kind of demystifying venture capital more generally. And with this thing called Signature Block, which is a great kind of newsletter to help people understand how to get into venture and how to kind of become like a helpful person in the venture capital ecosystem. So before we chat about that, I want to start on the first one and just like ask you, Vedika, like, how did you start to get into venture, and why did it kind of make sense as you were traveling through life? Why did venture kind of make sense?
Yeah, happy to share more of the backstory. So I need to take you back to when I was 20. I did a venture capital internship. I went to university in the Bay Area, and my senior year of college, I basically cold emailed my way into an internship at a growth stage fund. This is Mythos Capital, one of Peter Thiel's funds, and I hadn't had any full time jobs at that point in my life. And my takeaway was, how are these people getting paid to hear other people talk about how they're building the future? Right? Like, how is this a job that adults can have? And when I grow up, I'm going to have this job. And they were just extremely like intellectually generous with me as well, which left an impact in the best possible way. And when I graduated, I went to Stripe and ended up leaving the US because I did win the H-1B visa lottery and joined a fintech startup in London called TrueLayer as their first PM. I was really into this idea of building good fintech infrastructure for the internet because I saw at Stripe that if you do a good job building infrastructure, it's not about you. It's about all of the businesses that get started, better, faster, stronger because of the work that you do. And that was really rewarding because I wanted to kind of continue with that. Whilst I was a PM at TrueLayer and I loved it, that company grew extremely fast. It's 400 people now. I always remembered the energy of working in venture. And I started writing fantasy investment memos part-time. So when I saw a company that I thought was interesting get funded on TechCrunch, or there's some VCs like Union Square Ventures who publish a basically a deal memo, or an external facing version of a deal memo on their website, I would try to reverse engineer the deal as if I'd seen it. And of course, like I had no like access, so to say, or no capital to invest in these deals, but would try to really like learn more about the product, about the company, about the team, etc. Ended up writing about a few companies early on, and then when I interviewed for the role at Weekend Fund, this was a part-time chief of staff role. I shared some of my memos with Ryan, and I think he really appreciated that I kind of started doing the work without asking for permission. So there, like something about that dynamic was a bit like, you're already doing the work, like come to Weekend Fund and get paid for it. And yes, I started at Weekend Fund part time, as a part time chief of staff. And this was more than 4 years ago now. And yeah, I got promoted to partner last year, and it's been the best job I've ever had.
Yeah, that's great. I love that there is something cool about like, you know, when you're looking from the perspective of venture and you're like, oh my God, these people just get to listen to amazing ideas and then just like place the money towards the people. It's like, how do you get paid for that? And obviously that's kind of, venture is also just like a job of like taking in thousand things of inbound
Mm-hmm.
and just like calls every day. And then you like say no to almost everybody and blah, blah. So
Yeah.
it's like there are tons of downsides too. How do you think about a thing that I love is that you just as a person, I think, we were chatting before the show about just like kind of advice for ambitious young people. And it's like,
Mm-hmm.
how do you think about that kind of, the doing the work before you're there piece,
Mm-hmm.
or kind of like following what's easy for you? Tell me more about that and how you were doing deal memos, and then you were just like, I love this stuff, and like, and then
Mm-hmm.
you actually were like, now I'm going to actually go get a job with it. Tell us about that kind of mindset or process.
Yeah, that's a great question. So I think the internet makes it much easier to start doing the work we want to do without asking for permission, or at least parts of the work that we want to do. So I can just talk for venture in this case. Like, I think it really comes down to, like sourcing companies, right? Evaluating whether we want to invest in companies, and then really being the best possible partner to those companies and helping them grow. And then on the other side, being very like very responsible, communicative, and high performing fund managers to our LPs, because they're another stakeholder. And for my thinking was very much like, how can I unbundle the job, and what part of the job can I start doing without a venture capital fund saying you are now an investor? And my kind of logical answer to that was, I think the diligence side, like no one's stopping me kind of like diving into companies. So that was just my natural kind of starting point for that, because I could start today.
Yeah, I love that. I think it's kind of like, yeah, you're looking at the internet, and whether
Mm,
it's, for someone who's doing like coding stuff, they're
yeah,
like, oh, I can kind of, how do I want to like support? Well, I'll just
yeah.
go out. I love like the Ruby on Rails or the Rust
Mm-hmm,
ecosystem. I'm just
mm-hmm,
going to like contribute open source to that or whatever. And I think similarly, you can, within venture, you're just kind of like, look, it's not like you can go out necessarily and get, start investing as an angel investor and you have like, your $5 million or whatever, or, the LP connections. But what you can start doing is just like, hey, here's my take on diligence, and here's
mm-hmm,
my, so I think that's a very smart way to go about stuff. Do you think that and I guess for the folks listening, it's like when you're looking at the world, yeah, to
mm-hmm,
just kind of like, was there a generalizable piece of advice there,
mm-hmm. Yeah, great question. I think like a part of the generalizable piece of advice is just the permission slip, to be like, you can just like, if you know what you want to do in life. Of course, if you don't want to do, I think there's like a, set of like other explorations to go down. But if you know what you want to do, I think there's usually a version of that you can start doing today. And it was really helpful in a lot of other ways as well, in that it really gave me like a lot more conviction that I wanted to pursue venture. And that conviction made me pursue it with like a sense of drive that I think I wouldn't have had if I hadn't like been writing those memos nights and weekends. And then the other thing is, it just makes you like so much more competitive in just like the practicality of being more competitive in like interview process. Like you don't have to like scramble to, you know, get caught up. It's just a natural extension of what you were doing. And I really, there was something about that. I think it was the first time that I was going into a job where the interview like truly felt like a conversation, because it was just like felt like an extension of what I was
Yeah.
doing. And I you know, I want to see more of that. And then maybe some like unrelated to like the fantasy memo specifically, some, I think some more generalizable learnings from this, from like having this role at Weekend Fund is, early in my career, I was picking companies to work for, not people. Um, and even the best companies, I've worked at some incredible companies, Stripe being one of them, TrueLayer being another one, both breakouts, you know, in their kind of respective domains. But it's impossible, I think, for companies to like maintain talent as they grow, even the best companies. And for me, like, as you're having, you know, if it's your first job out of school or your second job out of school, ultimately, I think what makes or breaks that experience is like, who is the person you're working most closely with, or it's often the person you're working for, depends on your setup. And I think it just made much more sense. Like, I want to start a company someday, and for me, just like the insight really was I should just pick companies to work for, because sorry, people to work for, but because even companies are just a proxy. And
That's
people just felt like a better proxy. So that was, I think, one learning. The second learning was, um, oh, sorry, I guess one piece of context. So for me, like that person was Ryan at Weekend Fund, who's my boss and the general partner at the fund. He founded Product Hunt, and I had a lot of respect for Ryan going into it, and definitely lives up to the hype even 4 years later. Um, and then the second piece of generalizable advice is I think these like breakout roles. So first thing, like I think breakout roles are very real in that I don't think people's careers are like a series of equal opportunities, right? Like just like our company, sorry, our portfolios have like breakout companies where we'll have like one company, right? One outlier basically return the fund, and it's just like dwarfs the returns of everything else. And I think careers are similar in that you have typically you have like one breakout role. And for me, that's been Weekend Fund, where the learnings, the network, the growth, everything dwarfs previous roles I've had. So then it's like, what are the learnings around actually finding that breakout role, right? For anybody who's tuning in. And I think a lot of it is, I think these breakout roles are attached to people, not companies. So that's kind of going back to my previous point. And also, I think that these roles are very, they're just like attached to like specific networks. And a lot of them, a lot of it, I think, is like really expanding your network to be in the flow of these opportunities.
yeah, cool. I love all that. I think
Yeah.
it's a cool. I think the people first version of things. That's one of the smartest pieces of advice I got in college. Was just like
Mm,
choose the professors that you like and just like
mm,
take all their classes. Don't
that's,
base it off of the like the title of the
yeah.
class or whatever. You know, it's like if you like that person, take more random like we had a great computer science professor it's like just take all of his classes, you know, or like this amazing kind of Southeast Asian studies person, like she was amazing. So it's like so you can kind of just like take those people. And so as you're out there in the world thinking about who you admire, hit them up, hang out with them, and
Yeah.
just go and try to like be with those people.
Yeah. Or even
That's really
like
smart.
maintaining it, that's actually such a deceptively simple piece of advice for classes. Like choose the professors you like. You know, it like feels so simple. It's like, oh, that must be wrong. But it
Yeah,
actually sounds
yeah,
like great advice. And then the other thing is maybe like betting your career in emerging waves. Weekend Fund, and I know we're going to talk more about Signature Block, but Weekend Fund is an early stage fund, but we're extremely collaborative because we've seen an explosion of emerging fund managers around the fund. And we were in like a previous cohort or previous wave of these emerging fund managers. So one thing that was actually very important for me is, you know, like, can I join an organization or can I join a fund that's really capitalizing on this one of these emerging waves? And the opportunity to really be a builder versus a caretaker of something is also huge. I was the second person on the team at Weekend Fund, and I think my career has been like progressively smaller and smaller teams. I joined, yeah, when I joined Stripe, it was already 200 people. TrueLayer was, I was, it was 5 people. In Weekend Fund, I was the second person. So I think that's been a good sequencing.
I love that. Yeah.
Yeah.
Soon you'll look in the mirror and you'll see yourself, and then the next 10 years later, you'll look in the mirror and you'll see no one. You'll just be like, oh my God, I've like lost a total sense of self. Yeah, that's cool. I think it's a cool being part of the waves. I think for myself, like, early, just like doing ETH Denver stuff, it's like, this is a great wave. And I just like, I love all this stuff. So it's just like, be there, be with the people you like, vibe with them, hang out with them. And then I think, yeah, and thinking in terms of those networks, and you're like, oh yeah, you like random like computer science, blah, blah, blah. Okay, hang out with them. And also the kind of power law view of life, which is just like, and if something, the other kind of corollary to that is like, if you're doing something, you're like, oh, this isn't that great, and I've been here for 3 to 6 months. Well, go find your other breakout role somewhere else. Like, don't just keep on hanging out there for like 5 years and then wake up and you're like 37 or whatever.
Yeah. There's
know.
this Mark Andreessen, sorry, last thing on this. Mark Andreessen wrote a great series of blog posts that he compiled into the PMARCA Guide for Career Planning.
Oh, interesting.
It sounds like you've maybe read it, but
I thought I had, but then maybe I hadn't. So tell me about it. Yeah.
Okay, but no, not to delve too deep into the post itself. It's great, but there's this quote in there, which is like, you paraphrasing. You basically want to be taking a bet on career opportunities, which, if they work, make the rest of your career look like a footnote.
Yeah, exactly. Yeah. Exactly. So that's perfect. Yeah, it's kind of like, yeah, I love that. So we now know how to. Actually, let me say one other piece on VC life before going to emerging managers and or stuff, which is, I think, an interesting thing. A thing. How do I say this? I think being a venture capitalist, I think, is this weird, it's like put on this pedestal. Like, people like have these things of like, oh, you can be a doctor, you can be a lawyer, you can do whatever. But like, being a VC, not only, no one is VCs, only the people who are like random, like a couple random like Twitter influencer VCs. And also, and this is from like a general vibe of the world, like, and also they're like bad people, like you're a capitalist or whatever. And so I think for me personally, I think I haven't been a VC yet, but I think it's likely in my future that I will do VC stuff. And I think, but I had to kind of like work through my own shit, essentially, to be like, actually being a VC is like kind of cool. And you could be a cool VC. You can be a collaborative one like you guys. You can be one that's philosophical like Albert Wenger. You can be like Roy Bahat, who like works with like workers unions. And, and so I think like, so tell me a little bit about how you kind of, I don't know, like that, like, and so when I tell people who are just like super curious about the world, I'm like, you should probably just be a VC. You're allowed to do that. What kind of people do you think would be a good fit for VC and to kind of get over that weird barrier?
Yeah, great question, and really good examples between Albert Wagner and Roy, etc. I think they're all like very good at being masters of their domains. In terms of what type of person I think that can be a good fit for venture, so someone who like goes down rabbit holes for a living, and it's coming in the way of their work currently. I think in venture, you get to go down these like, you're like a professional rabbit hole digger, so to say. So if you're like extremely intellectually curious about the world, then the other thing is, I find that VCs tend to be very, like, the best VCs actually tend to be very good systems thinkers. And what I mean by that is like, like the kind of person who's able to take like a lot of disparate inputs. I read like this market map. I talked to this founder. I did this, I did that, and be able to like really put together like a coherent map that gets like incrementally richer about where things are going. And the other thing that I think is very useful in venture is in some ways your job is to like assess potential, especially in the early stage, right? Because there isn't a lot of hard evidence to go off. So I think in some ways, like imagination is very important in venture. Are you able to see things where others aren't? I think in some calls, you just have this like moment where with a founder where they just feel seen by you, and I think that's really magical. And there's definitely like some investors like really have that talent to be like, I understand your frustration with the current state of the world, right? And I see the world that you want to build, right? The other thing is like just dealing with a lot of different threads, um, like open. This is something transparently I'm still trying to get better at, but responsiveness like matters tremendously in venture because early stage startups like inherently move very fast, and you're kind of like depending on how involved you are with these companies, like you need to move at that speed, but you need to do it across the portfolio.
Yeah, yeah,
Like
cool.
depending
Yeah,
on the type of investor you are. So I think like someone who's able to like parallel process a lot, I think is like a good, yeah, it's a good skill to have as well in venture.
yeah. I love all those. I think it's kind of a funny uh and like it's a yeah, the rabbit holing and the kind of being a systems thinker and the kind
Yeah.
of the and the synthesis. And it's like kind of funny
Mm.
because you and I were chatting about this digital health market map that you just made. And it's funny because like market maps I think can be seen as like, oh, here's another market
Yeah.
map from a random other VC, but actually it's very helpful
Like
because
a content
you kind of
gimmick. Yeah.
yeah, exactly. It's a
Yeah.
content gimmick, but
Yeah.
actually, it's like, no, here's a visualized representation of this industry and where it's going. And so, becoming an expert at market maps is very that synthesis and distillation process is important. Obviously, the like checking in potential is key. Where you're like, oh my god, and vibing with people and be like, oh
Yeah.
my god, that sounds
Yeah.
really frustrating, and you seem like energetic, like here's some money, and then yeah, the responsiveness. So that seems. And let me ask one other question, which is just if you, because I think a lot of people, a lot of the people that I interact with are like adjacent to this, and that they're just like they love rabbit holes. They're kind of
Yeah.
ADHD energy, and
Yeah.
so I'm probably shilling VC on them too much. What thing should I like? I don't know. Like if you have some random rabbit holer on the internet, like should everybody be a VC, or what kind of things would you be like? I'm not sure if it's a good fit for you.
You mean like in the terms of the type of person or like the themes?
The type
Hmm.
of person where I'm like, oh, I'm like trying, giving life advice to folks. I'm like, oh, like for me right now, I'm kind of in a simple form where I'm like, anybody who loves rabbit holing, I tell them to
Yeah.
be a VC, or
All
anybody
right.
who's hyper curious. But a
Okay.
lot of people like rabbit holing.
Yeah. You mean like what's the nuance? Like
Yeah,
you
what's
mean
the nuance?
yeah.
And yeah, if I, yeah, yeah, yeah.
Okay. Yeah, I think like a part of the nuance is a lot of people, like I think of my boyfriend for example, he's very adept at rabbit holing, um but I think like it also requires this like additional sense of like additional filter on the world, which is like, is this going to be like a like am I deeply interested in venture capital specific? Because venture is like a very specific tool, right? To like, like a very specific kind of funding mechanism. So, firstly, like, am I philosophically aligned with like the value venture can create in the world? I find that people who are philosophically aligned with venture are just far more likely to last the distance, as with everything else. Um, then I think another nuance is like I think venture also has very specific filters, right? Like not every technology rabbit hole I think is actually a good fit for venture capital, right? You kind of it requires filters like is this extremely scalable, right? Can you capture like value at venture scale? Because there's a lot of like valuable technology can create a lot of value. Not all of it is like capturable. Um, am I and another thing that actually I've been trying to invest a bit more in is like understanding the history of venture, and like someone who has like an interest in how we got here, because the deeper you're able to understand that, because at Signature Block we're really building for what I think is like the future direction of venture capital. So that's led me down this like exploration of, wait, how do we get here, why are things the way they are, right? Like who got us here? Who were the key players? So I think that's like another point of nuance.
Cool. Yeah, I think that's right. I think it's a yeah, and as you say, I think that's true. It's just like some people love going down rabbit holes, but they like doing that in like a PhD setting where they're
Yeah,
kind of the rabbit hole they're going down is like biotechnology and how this like receptor deals with this receptor and blah, blah, blah. And so it's like that's a kind of rabbit hole, but
yeah.
you have to kind of buy
Have
into
this like capital
how
allocation kind of
yeah.
lens, I suppose. Yeah,
Yeah,
sorry to
capital
cut you off.
allocation. No, you're good. Yeah, you're good. Yeah, it's your interview. You know, I thought capital allocation, betting, and power law of returns. You know, and so it's like if you're philosophically aligned with that, then kind of dive in. So let's chat about the future of. So you know, we can pretend that we're reading Power Law by Sebastian or whatever, and
Mm,
you're kind of this is the next chapter of
yeah.
that book. What is well actually tell us like what is signature block for the
Mm,
listeners, and then what is the future of how are you building the future of venture capital?
yes. Um, so Signature Block is a newsletter we started at Weekend Fund. We started it mid last year, and every topic deep dives into a how to topic that's relevant for emerging fund managers. So, some examples of past posts have been how to raise from LPs, how to create an LP pitch deck. And what's really important about how we approach these topics is you get to hear directly from experienced fund managers. In venture capital, I think there's very little right and wrong because primarily because you can't ape into anybody else's strategy because you won't have the same advantages as them. So what we really try to do is firstly like try to connect like emerging fund managers like from a knowledge perspective to people who have done it before, right? And really like get out of the way and let experienced fund managers like talk directly to our audience. And then secondly, like try to include like a diversity of input in each of these topics because I think like strategy and advantages is very personal in venture.
Yeah, I love that. I love
Yeah.
the idea of and as a note for listeners, it is the best. I was doing some research on like how to start VC funds, whatever. I think it's the best. There's like there's a book that's behind me somewhere. What is it called? It's the Business of Venture Capital.
Yes.
That's a good book. And the Power Law is a good book, but like in terms of just like day to day, who are the best emerging fund managers of the world, and like let's hear them speak about it. It's amazing. So you guys are doing great work. So keep that up. And I also love the idea of you guys. It makes me think of this Audrey Tang piece where she's like, I am the channel through which other people speak. And so that's what emerging, what signature
Mm,
block is. It's like you guys are just the channel to be like, look, you're
yeah.
getting out of the way and you're letting the folks talk about it. And then
Yeah.
certain things will resonate with one person or another or whatever. So tell us about the future of how is this building the future of
Mm,
VC? Tell us more about where you see things going.
yeah. So we're seeing an explosion of fund managers around the fund. And this has been primarily driven by a couple of things. Firstly, I think like through Twitter, through Substack, and through other content platforms, it's much easier to get personal distribution without an institution. And hence, like, I think like the kind of like pessimistic version in a way of this is like, oh, then you just get like VCs making memes, right? But like, I think it's important to understand like how are VCs able to make memes, right? Like, and it's because like these distribution platforms are they're open and they're extremely powerful if you have an audience. The second thing is a lot of the enabling infrastructure to start a venture fund, primarily driven by the work that AngelList is doing, is now far more accessible. So it's easier to start smaller funds. Specifically, AngelList has a product called Rolling Funds, where you can get LPs to subscribe to your fund on a quarter by quarter basis, right? So you don't have to have this like what traditionally used to happen is you needed to like raise from LPs and have this big bang close event. It's much harder to do that if you don't have a track record, right? So what, and kind of cold start problem always was, well, LPs don't want to invest in you because you don't have a track record. And then how do you build a track record if you don't have enough personal capital to angel invest, if you're not a scout to actually prove to LPs, right, that you actually do have good access and can be like a high performing investor. So rolling funds, I think to an extent actually solves that problem. It's really important enabling innovation. So my point is like a lot of these like kind of enabling forces are coming together in a perfect storm. And we see an explosion of emerging fund managers around the fund. And what we want to do is we want to serve them with content. So that's what Signature Block is as it stands currently. But also, we're working on a product that's kind of pulling more on the capital thread, because I think there's another, and we've run some experiments. So one is actually, so for Weekend Fund itself, Weekend Fund 3 was raised from 370 LPs. So we actually did a community raise for the fund. So another parallel trend is I think there's actually been like an explosion of operator LPs. So these are, you know, like they're kind of they're basically adding to the arena of what used to be institutional LPs only. So that's creating like a new source of capital. So you have operator LPs, you have emerging GPs, and I think increasingly my hypothesis is like these are the same people. And so I think there's a lot of opportunities, and we're kind of pulling some threads around how can we do better LP GP matching. And then the third thread to really like pull on, I think, just to better serve emerging fund managers is community. A lot of these funds are small funds and they're collaborative with by design. I think there's a lot to be done to help emerging fund managers find their we need a better word for this, but every investor has a couple of co-investor BFFs to say, where you have this like high intensity of deal sharing. And I think that actually like sustains especially solo GPs and emerging fund managers. So the other thing I think we really want to do is like figure out how to better serve them, you know, from like a community perspective.
Yeah. Damn. Yeah, I love each of those things. It's making me think of I just did an interview with this woman, Steph Moy,
Mm,
who is building this thing called PIN, which is a really good thing that democratizes access to VC by using these investment funds so that people
cool.
with less than 25K or so
Mm,
non-accredited investors can invest.
mm,
And I also just did an interview with Malun Yen from Operator Collective, and it's a similar, like, yeah, just like
yeah,
tons of operator LPs, and it's just like, and so, and that one's amazing because she has 90%, I think 90% of her LPs are women,
yeah.
which is just like, oh my god, that's amazing.
Yeah,
And so
I'm currently working on a post for Signature Block on how to do a community raise
that would be
for
great.
your
Yeah, I think
fund.
that's great. Yeah, and I think that there's a it's interesting because I think that the capital piece, as you said there's like, now that you have people who are, you know, tell me more about this kind of, you know, as we have all these LPs that exist out there, and the LPs are
Mhm.
looking, and the GPs, they're kind of the same person. So it's just like
Mm,
there's pools of capital, and everybody's kind of pointing it
yeah,
at each other, and then
like swapping
everybody's also kind of,
money.
yeah, everybody's kind of like pointing, and then people are starting to point at the founders, but the founders are also sometimes just like they're selling to
Investing.
the company. You know, the LP is an LP at a big B2B SaaS company, and that person, the founder, sells to them. And so tell me about, like, I don't, there's these like these weird networks that are emerging. I guess maybe to ask like the far away question, like here, it's like you talked about a lot of cool specific things that you guys are doing
Mm.
today. In 20 years, do you think it's going to look like, what will it look like? A bunch of random like solo GPs with in weird networks, or like how does this kind of, you know, balance in 20 years? Where does this go?
Yeah, that's a great question. I think in 20 years we'll see as software eats the world, um, I think we're going to see people who have audiences increasingly do more investment. We're seeing this already, right? Everyone's becoming an investor, directionally speaking. And I think kind of COVID accelerated a lot of this because we got a lot more comfortable losing and winning money online through, and you see this through like phenomenons like GameStop, etc. So let's say directionally speaking, everyone's becoming an investor. And then it's much easier to build audiences. So I think you're already seeing this, like you have a podcast, right? So I think there's going to be a lot more niche audiences created as a result. And I expect to see like venture capital to become a part of the monetization stack for anybody who has like a technology focused audience. But then the point is like that people, I think the difference between technology focused and non-technology business focused audiences is going to blur as well as software eats the world. So really, like I would say like anybody who has like a kind of business or like, like media focused audience even. And crypto is an interesting example of like a scene that's really merging the entertainment scene, Hollywood modeling, like the kind of athletic scene with the technology scenes. I think we're going to see a lot more of that as well. So I expect kind of venture to become a part of like the standard monetization stack for creators 20 years out. I also expect to see like a lot more squad based investing. So this happens kind of in the traditional venture world all the time, but I think that's going to explode in that people are going to be, I think, investing in technology a lot more. You already see this. Like, I don't know what the stat is. 54% or something like that, or at least like uh, in terms of rough magnitude of the one of the U.S. stock exchanges is venture funded companies, right? So like that's going to grow as well. So then that plays into a bunch of things, but I think you'll see a lot more of the squad based investing where people are investing with their friends in technology based companies. And the
I
barriers for
love.
entry are going to keep going down, I think, as well, and kind of really making venture more accessible as an asset class.
Yeah, yeah, I think it's smart. I think it's kind of like, and it's like, yeah, it's kind of a weird thing where it's like so much of the yeah, more access to it and index on venture capital, those kinds of things that allow you to kind of be like, look, this is where the frontier of science, then and technology being turned into these like venture scale businesses is where a lot of like money happens. And right now it's in still a small group, and that group has become a lot larger over time.
Yeah.
And so continuing to make it larger, I think is cool. I think it's interesting that you chatted about one note on the Web3 side is like, yeah, I love the meme of this from David Hoffman from
Mm.
Bankless of, it's culturalizing finance and also financializing culture. And so those things are kind of just like
Both ways.
merging together
Mm.
in this funny way. How do you think though about like a thing, and this is like a more general question for you as well, which I had before the show, which is like, I hear what you're saying about, okay, we're going to be in these squads and like we're these individual collectivism, we're in these networks, and we're going to be it'll become more democratized in different ways. And I super agree with you on part of the stack where it's like, not only do you have a Patreon or a Substack where people can pledge, but it's like you should also be investing. It's like
Yeah.
that's kind of part of your ball game. How do you think though about like, if you're a LP, especially like an institutional LP, I was chatting with one of my friends at a large
Yeah.
university, and I was like, what kind of people are you looking at? And he's
Mm.
like, look, we only think that like 6 VC firms matter. And like, so we don't, our allocation is whatever. It's like 10% or something, because like, we shouldn't like, because it's not a good asset class if you're not in these massive kind of grand slam companies. And so how does that
Mm.
kind of perspective versus the like, oh, everybody should have it in their stack. And it's like, people are pointing money at a bunch of different things, but only a few of them actually matter. How do you think
Mm.
about that?
I think your friend's probably right. But I think the question is like directionally, where are these 6 people gonna come from? Like venture, I think anytime there's actually democratization, it usually amplifies the power law, which I think is like kind of like seems to be very counterintuitive because we see decks all the time, especially in the creator economy, where it says like, like we're gonna create a middle class of creators through this like platform, but it seems like every time like the power law just gets more and more and more extreme with every new platform that's created because you're just able to like aggregate audiences better. So I think I'm with your friend. Like, I don't think the power law of venture is fundamentally changing at all. The other reason is because the outcomes just seem to get larger as well. there was this like kind of meme last year, and this is very much like a bull market meme that like decacorns are the new unicorns,
Hmm.
right? But
Yeah.
yeah, but we do have like companies in the portfolio that are approaching that size. And I don't, and companies are staying private longer as well. Um, so yeah, I just think that these six funds increasingly are going to be funds that own their own distribution, because I think ultimately that's like the most powerful advantage that you can have, as like a VC, is can you help this founder kind of get customers, you know, get attention, get business, and these like proprietary networks. Basically, it used to be like very network driven, I think, but I think the networks themselves and the audiences are getting more and more and more proprietary, right? Like when people want like Ryan's money, they only want Ryan's money. They don't want money from someone who has started a community driven product on the internet. They want the money of the founder of Product Hunt. And this is what I mean.
Yeah, interesting. Yeah, it's kind of a yeah, it's a funny piece where it's like, and maybe, yeah, yeah, I think that, well, as you said, I definitely agree. Yeah, there's as we make things, democratization just leads to more power law. It does lead to democratization, a super long tail, but like
Yeah.
it also just is like, nope, there's like these top six or whatever. And it's interesting because, yeah, there's a kind of a funny piece about the whole VC world is that to some extent there's this like desire and vibe for like being, you guys are like, oh, we're a collaborative fund, we're kind of, we kind of work, but at the same time it's like, well, but like we're looking for like distribution, and like the distribution, and like, and if you're a person, if you're a company, you want the distribution. uh, I don't know, so I found a question on this before,
Mm-hmm.
diving into one other thing, which is like, how do you, that kind of, I don't know, how do you square that circle of like both being collaborative but also
Mm.
being competitive?
Mm. Yeah, it's very much like it's a hard line to walk, and I think the net result is something like co-opetition in venture, really. But the idea is though, the more collaborative you are, the less zero sum the game is, but also the the more distinctive you are, the less zero sum the game is as well, right? Because then your capital is not a commodity, so to say. And it's kind of weird to, I think, talk about venture. Ryan and I are both product managers by trade, so a lot of how we strategize about this is like, how can we build the best possible product for the different users on the different sides of like the weekend fund ecosystem, which is really LPs, founders, and co-investors. But I think the art here is to strategize like it's a product, but deliver like the kind of craft that venture is, because I think it's kind of tricky to like talk about these things in terms of like product and distribution, and this, it starts to feel like very mechanized in a way that I just don't think building these outlier companies is. It starts to, you start to sound like there's like some sort of formula to it. Only if you own your own distribution can you find the next outlier. And I think that's kind of dangerous to think as well, because ultimately, like, we're in like very much like a craft driven business. So one thing we kind of think about is like, how do we make the weekend fun product more distinctive over time, but also how do we kind of keep that humanity as we're actually delivering our service, because it is a service. And then at the same time, how do we lean into our advantages on the kind of more network driven and collaboration side? Because that's, I think that's, we're continuing to build advantages in that side, kind of through the signature block audience. And a part of our motivation, just selfishly, for working on signature block is other emerging fund managers are our largest driver of deal flow. So in some ways, it's like stupid not to do anything to serve them, because there's only one strategy in business. You just solve more of your users' problems over time, right? And on one side of the weekend fund platform, like co-investors in emerging fund managers, there are users. So it isn't all like, it isn't, there's like I philosophically want to see emerging fund managers succeed, and I love serving them as an audience. I love hanging out with them. I love jamming a strategy on them. I want to know what experiments they're running. Like they're just very much my people. But also on the other side, I think it strategically makes sense for weekend fund.
Yeah, that's funny. It's like I think you did a good job of like explaining both the it's just this weird back and forth between like, VC is a power law kind of zero marginal cost of
Yeah.
distribution industry, but it's also all about the craft and it's a
Yes.
cottage industry and it's about people,
Yes.
and that like, you love both like hanging out, build, it being with these awesome other managers, but it also makes it strategically. So it's kind
Yeah.
of like, it's nice when those things line up, and I'm reminded when I was at MIT, it was like, I was not aligned with that ecosystem where everybody was like optimizing for H index and like which different thing, Harvard, MIT, blah, blah. And I was
Yeah.
like, I don't really vibe this way. And like
Yeah.
the world that I live in now is it still has its own stupid ranking system of like Twitter followers or whatever. But it's like, I'm kind of more okay with that, So it's
Mm,
like, you kind of got to choose your devil or whatever. Okay. So as we wrap here, I
yeah.
want to ask, just do a quick overrated, underrated, which is,
Mm.
so I'll ask the question and you say overrated, underrated, and do you have like a one sentence kind of response? Do you think that a VC as an asset class is overrated or underrated?
Um, Underrated. I think I think a lot of the kind of maybe a lot of the rhetoric is controlled by I think the kind of older guard of venture capital funds, and I think I think they add a lot to the ecosystem, but I think the kind of emerging fund manager ecosystem is really underrated. There are fund managers who are building very specific structural advantages that I think are going to be very powerful.
Yeah,
Sorry,
I
that's
love
not
that. And
one
I think
sentence. I will aim
no,
towards one
that's
sentence.
okay. No, that's okay. That's okay. You try to anchor on one
Yeah.
sentence, and then when it's as long as it's less than 30 seconds, I give you a
Okay.
passing grade.
Okay. Thank you.
Yeah. I also love the kind of frame, the kind of product frame that you have is really interesting, and also the kind of viewing just like emerging funds as businesses and thinking about how they have different competitive advantages. I think it's a cool
Yeah.
kind of frame as well. Okay, do you think with that in mind, solo capitalists, is that overrated or underrated?
Um, I think it's actually underrated. It's probably overrated in terms. I think there's nuance. It's overrated in terms of a term because you just think like this is like a lone wolf just operating. I think people like still give you leverage. Like that's still like a real concept. In fact, I think the best people give you outsized leverage. And like Ryan decided to work with me, and I'm very grateful for that. But I think not just in venture, we're going to start to see smaller and smaller teams build larger and larger businesses because like to me technology is about doing more with less. Like that's the fundamental premise. It's hard to see it go in the other direction.
Yeah, totally. Yeah, things will become more solo and not. Yeah, it's kind of a weird. It's like more solo and not less, but also all the collectives and squads are going to show up. So who knows? And then the final one is: do you think Stripe is overrated or underrated?
um Underrated also. I'm probably like very optimistic, but Stripe's one of those businesses that just grows with the grain of the internet. I think like Google probably is like the purest um, example of this in that it just grows with internet usage, and that just makes it like the purest cash printing machine on the internet. But I think Stripe is a second, which is it grows with people wanting to do business on the internet.
Yep, love it. Yep, yep. I'm into that. Great. Well, thank you so much for coming on today,
Yes,
Vedika.
thank you
And
for having me. This was
yeah,
a blast.
yeah, yeah, it was great. And so, as to check out Vedika online, you can go to Twitter at VEDIKA and then Jane, JA, and then underscore
Mm.
IN. You can check out signatureblock.co if you're some kind of person who's just curious about the VC world, wants to make your own VC fund, any of those things. It really is. It's an amazing place to do that, and maybe you'll end up co-investing.
Thank
And
you.
then finally, if you're a founder, check out weekend.fund.
Yes.
That's where you can find Ryan and Vedika, and also especially if you're into product, community building, all that stuff. Those are like they're great and know a lot about that. So, anything else you want to say to the listeners today, Vedika?
No, yeah. Hit me up. Also, if you just want to email me, I'm at Vedika@weekend.fund.
Boom, perfect.
Boom.
Yeah, if you made it to the end of the that's your gift at the end of the is the email address. It's like when you get a girl's digits or a guy's
Yeah.
digits, you're like, oh, damn, I got it. Thanks so much for listening today. If you liked the show, please give us a 5-star podcast review or subscribe on YouTube. And if you'd like to chat about this episode with a community of amazing, smart, ambitious, divergent people, come on by and join our Discord. You can find it at root.co. That's ROOTE.co. And then finally, if you'd like to contribute to these ideas being shared more widely in society, you can support the podcast production team at patreon.com/Rhys Lindmark. That's patreon.com/RHYSLINDMARK. Thanks, and see you here for the next episode. Bye.